Mhm. What's going on, my friend? We're back for another video with the Meditative Investor, and in this video we're going to discuss the importance of why Chris really wants us to build out our position of 125 shares. Okay, I found out it's a really powerful reason as far as for like long-term investing, like looking longer down the line of what we can do with these shares and how we can create our uh, really build up our portfolio to a bigger size a little bit faster. Okay, now if you're new to the channel, go ahead and hit the subscribe button, and also hit that like button for me, because it helps the channel grow and kind of gets our video out to more people so we can help them become meditative investors. Okay, so let's go ahead and hop over to our phone, and I'm going to show you why it's so powerful to build up a nice solid position in these companies. Okay, let's go ahead and do this. So we're gonna open up Robinhood real quick, and I already have it open here. Okay, Plug Power. I'm gonna show you an example with Plug Power. Hypothetically speaking, if you were to build up a position of 125 shares in Plug Power, let's say at $10 per share. Okay, and now it's at $60.25. So you spent $1,250 to build out a position in Plug Power of 125 shares. Now fast forward, okay, maybe like 3-4 months later, it's at $60. So you have a couple options now here. You're up 600% on your initial position. Okay, so now that 1,000 is worth 6,600 and some dollars. Okay, so what I think, really what I know, what he's getting us to be able to do is to learn how to trade options, guys. Options is a very powerful tool if you learn how to use it. There will be more videos on this channel talking about options here soon. Okay, so whenever you own 100 shares of a company, it gives you the options to sell covered calls on your position. So what does that mean? Whenever you sell a covered call, that means you are collecting a premium. You are the seller in this transaction, not the buyer. Okay, so whenever you sell, you receive the premium for that contract. Now, that contract states that you are giving the right for someone else to purchase your shares at whatever strike price you decide to set it at. Okay, let me show you an example here. We're going to go for the January 22nd expiration date. Okay, that is the date that the option expires. Okay, now it's at $60 per share. Let's just say we want to do a $65 call. You will go here, you will click the $65 call. So you're saying that if Plug closes under over $65 per share on January 22nd, you are given the right to sell your shares at $65 per share. Okay, now the thing is, you receive $233 for this contract. Okay, so that's coming into your pocket. Okay, and also the one of the awesome things is as well is that $2.33 that says right there, that actually goes and decreases your cost basis. So if your cost basis is $10, your cost basis just by receiving this money reduces by $2.33. So now your cost basis is $7.67. Isn't that powerful? Insane, right? So you're gonna receive this premium, and by Friday, if Plug closes above, okay, you have to sell your shares at $65 per share. 100 shares, you receive $6,500 in buying power, and you keep the $233 of premium. And then you can choose to either sell a put, which I went over in my last video, so I'll put that up here, and you can do the process all over again. Earn premium for selling a put. If you get assigned, you can continue to sell cover calls. That, my friend, is the wheel strategy. It just gives you more power, just more leverage. And it's a really beautiful thing. And plus, you're already up 600%. So, unless you're married to the stock, or it's like a super long-term play, you can feel free to buy the contract back if you don't want to, if you think it's going to expire over $65 per share. Okay, so that's one of the most powerfulest things to me that I see as far as building out these solid positions. Because prior to me learning about this, I would spread myself so thin, buying a few shares of this, buying a few shares of that. When what I'm learning is you pick a couple plays. That's if you choose to go the route of picking stocks. You can always choose to invest passively in index funds and ETFs, perfectly fine. Do that. But if you want to, take the route of picking stocks, choose a couple plays that you believe in, hold them for the long term, build out a nice solid position, as the stock rises up. If it's rising really, really, really fast, don't sell cover calls. Because you're gonna miss out on the run up, and you're gonna, cap yourself at your profit limit. Okay. But if the shares are kind of consolidating, that'll be a great time to start selling cover calls. Even if they're moving up a little bit, it's okay. You can always buy your contract back. Remember that. You sell it, but if you want to keep your shares and it's close to expiration date, and you see that it's close to your strike price, you can buy it back. You might have to pay a little bit more than what you received for it, but that's if you're married to your shares and you want to keep them for the long term at that cost basis of $10. Then you can choose to buy your contract back. It's completely up to you, at your discretion. Okay. So that's pretty much all I have for you in this video. Again, if you enjoyed this content, go ahead and hit that like button. Hit that subscribe button if you're new here and you want to see more information about becoming a meditative investor, learning to keep your emotions in check, earn more money, build out a nice portfolio to create passive income. That's ultimately the goal. You can create passive income doing options, dividends, all other different ways of creating passive income in the market. And this channel is going to help you get clear on how to do that. Okay. So blessings to you. I look forward to seeing you in another video. And please, in the comment section, tell me, what are your top 3 positions that you're holding now? Why are they your top 3 positions? Okay, let's go ahead and start a dialogue in the comment section. Later. Blessings.